Good afternoon and good morning, ladies and gentlemen. My name is Johan Raslan, and I'm here to welcome you from the ASEAN Climate Governance Network, or ACGN, and Sustainable Finance Institute Asia. Welcome you to this webinar in the series of 6 conversations in climate governance. Now, ACGN is a network of institutes of directors covering most of ASEAN. We are a loose network, and we have been inspired by the World Economic Forum's Climate Governance International Initiative. And our aim is to unleash the power of board members and also unleash the power of ASEAN to play our part in combating climate change. These conversations are a primer in climate change and how business can work together to counter it. Today, financial services is in the spotlight. Financial services has a huge role to play, far greater than its 4 walls of its banks and insurance companies, but out into the wider community and wider industries. And today we have an excellent panel. And this panel is moderated by the chairman of the Singapore Institute of Directors, Wong Su-Yen. Now, Wong Su-Yen, apart from being the chairperson of the Singapore Institute of Directors, she's also a National University of Singapore adjunct professor and multiple board member over the years with a background in some of the biggest management consulting companies in the world, namely Marsh McLennan, Mercer, and Oliver Wyman. So today I know you're in good hands with Su-Yen. She's prepared there, and with her are an excellent panel of panelists from around the ASEAN region who will discuss this issue with you. So I will say goodbye from me and hand you over now to Wong Su-Yen. Over to you, Su-Yen. Thank you.
Thank you, Dato Johan. So great to be with everyone here today. And I'm delighted to have with me 4 wonderful panelists that I'm going to introduce to you. In addition, I want to welcome everybody to pose any questions that you may have for our panelists in the Q&A box, which you'll see at the bottom of your Zoom panel. And we'll get to as many of them as we can, I promise, but you need to put your questions into the Q&A box, all right? So without further ado, let me introduce our panelists in alphabetical order. So first of all, Anthony Chin is the CEO of MARUHAN Japan Bank, and he brings 25 years of banking experience. He is based in Laos, and he is a member of the Lao ICT Commerce Association's FinTech Board. And he was also recently appointed by the government of Lao PDR to the board of its advisory committee for the National Credit Guarantee Scheme. Now, previously, he was with a major banking group in Malaysia, and he's held numerous senior leadership roles, including Deputy Managing Director and Group Digital Experience, Innovation, and Culture Transformation. He was also chairman of its Group Digital Security Council, looking at cybersecurity, and has worked across the Asia-Pacific region. He has led his organization to win many notable industry recognition and prestigious awards. So aside from being a certified credit professional by the Asian Institute of Chartered Bankers, he was also conferred a Chartered Banker status, jointly awarded by the Chartered Banker Institute UK and the Asian Institute of Chartered Bankers. In addition to that, he's also Lean Six Sigma trained and is a member of the Malaysian Business Council Laos and the Laos National Chamber of Commerce and Industry. So welcome, Anthony. Delighted to have you here with us today.
Sawadee. Hello.
Now, moving on to Lynette Ortiz. Lynette was appointed as the very first Filipino CEO of Standard Chartered Bank Philippines in 2016. Prior to that, she was the regional head of capital markets for ASEAN, based in Singapore for 2 years. She's a highly regarded banker, both locally and internationally, given her extensive banking experience, knowledge of the ASEAN markets, as well as strong client relationships. So she can give you a bit of perspective from the region, as can Anthony. Now, Lynette has led several landmark transactions for ASEAN issuers, both domestically and internationally. Prior to assuming her regional role, she was the financial markets and capital markets head for the Philippines since 2011. Now, she also has 30 years of experience, starting with Citibank in New York. And subsequent to that, she moved on to roles in risk management, treasury, corporate finance, and capital markets in both foreign and local institutions. So she's run the full gamut. She was named UN Women 2021 Philippine Women's Empowerment Principles Awards Champion for Leadership Commitment, in recognition of her role in setting strong corporate commitments and inclusive leadership. She's board member and chair of BAP Risk Management Committee of the Bankers Association of the Philippines, member of the Open Market Committee of the Bankers Association of the Philippines, and also a member of the Industry Advisory Panel for the Joint Sustainable Finance Working Group of the ASEAN Capital Markets Forum. She's also a member and vice chair of the D&I Committee of the Management Association of the Philippines, member of the British Chamber of Commerce, and the Filipina CEO. She's a busy woman indeed. Thank you for joining us, Lynette.
Thank you, Su-Yen.
Now moving on to Suraya Sani. Suraya is the Deputy Director of Sustainability at Bank Negara, Malaysia. She is responsible for driving the climate change and environmental agenda at Bank Negara. Prior to that, she was the head of Financial Sector Administration Unit, which provides administrative and support services, including training and performance-related services to line departments. She has over 12 years of experience in the financial sector supervision with Bank Negara and has been instrumental in the development of Bank Negara's climate change and principle-based taxonomy, as well as the ASEAN taxonomy for sustainable finance. She's a member also of the ASEAN Taxonomy Working Group 1 and 2. So as you can see, our panelists here all bring deep knowledge in their markets as well as beyond their markets. Now moving on, so thank you, Suraya, for joining us today.
Thank you, Su-Yen. Hello, everyone.
And then last but not least, we have Kun Yongyut Setthawiwat, who is Managing Director and Group Treasurer for the Thai Union Group Public Company Limited. Now, he brings 25 years of experience in treasury corporate finance functions from the banking industry, as well as multinational corporations. And he has experience in international tax, insurance, accounting, risk management, and more. He joined Thai Union in 2007, and he currently heads the Treasury and Finance Shared Services Department, which comprises 3 divisions, namely Group Treasury and Liquidity Management, Group Collection Center and Credit Control, Group Payment Center, and Payroll Services. In 2015, he led the transformation of the Treasury Department at Thai Union from local treasury running to global treasury setup with a global cash pool, centralized financing, regional in-house banking, regional finance shared services, and process automation. And in 2021, he successfully completed the launch of the so-called Blue Finance, which is financing related projects that benefit the planet's oceans. And this has enabled the company to have converted 50% of its long-term financing from traditional finance to Blue Finance. So again, really broad perspective you're going to get from Kun Yongyut. Welcome. Thank you for joining us.
Thank you, Su-Yen. Good afternoon, everyone.
Yes, good afternoon, everyone. I see that we have today online 81 participants from across the region. So we're really excited to be talking to you about this, and make sure that you keep your questions coming in the Q&A box. To kick things off, let me start with Lynette. Let me invite you to perhaps share the efforts of the Philippine Central Bank. Now, our topic today is really climate change in the banking sector, right? And how it's going to affect your company. So for those of you who are online listening into the webinar today, you're probably thinking, okay, well, how is this going to affect my company? So I'm going to invite Lynette to provide a perspective on what's happening in the Philippines. What's the central bank doing to promote sustainability? And in particular, the circulars which the industry is expected to adopt, and perhaps a little bit about the challenges that come along with that. Lynette, over to you.
Yeah, thank you, Su-Yen. And first of all, thank you for inviting me to this most esteemed panel. Certainly looking forward to the rich discussion we'll be having this afternoon. I think first, let me just frame the discussion around how companies are facing a lot of pressure from various stakeholders. I guess first would be the policy and regulation leg, where there is a lot of pressure to decarbonize, and along with that, a lot of uncertainty around increasing carbon prices and strong public support for greenhouse gas regulation. This is expected to increase, of course, in Asia. The second pillar would be around customers, where, of course, in the West, demand is shifting to green electricity to reduce scope 2 emissions from consumption or acquired energy. And in Asia, our energy security concerns remain, but off-takers are also under a lot of pressure to have minimum green targets. And then there's the third stakeholder, which are really investors and activists, most pronounced in the West, where there are many institutions holding assets committed to investing in fossil-based, to divest rather from fossil-based assets and to green their portfolio. Capital markets, for one, are increasingly punishing high carbon intensity companies and issuers. And then there are, of course, banks. In pursuit of a low carbon portfolio, some banks have reduced exposure to coal-fired powered plants, developed phase-out deadlines, and begun to sell existing liabilities with coal exposures. And many banks are facing increasing shareholder pressure as well to reduce exposure. So banks are increasingly scrutinizing lending through an ESG lens and setting firm emission targets following shareholder pressure, also rebooting its purpose in communities. So I guess this also marks a shift away from shareholder capitalism to stakeholder capitalism. And if I just may share for Standard Chartered, we have published our stance around becoming the world's most sustainable and responsible bank. And we have a net zero approach, which aims at reducing emissions associated with our financing activities to net zero by 2050. We are also looking to catalyze finance and partnerships to scale impact, climate, and capital solutions to where they are needed most, including a plan to mobilize around 300 billion in green and transition finance by 2030. Now to, I guess, focus and zero in on the Philippines, we are 2 out of the 10 ASEAN countries who have not yet made net zero commitments. Although we do have nationally determined contributions to decarbonize, only 3% of it is unconditional and 75% conditional. The goal is for renewables to deliver 35% of energy and power generation by 2030, and the country has legislated a moratorium on coal power plants. Now, the BSP, or central bank, has been leading the charge in terms of really pushing the sustainability ESG agenda. And there have been circulars issued which require banks to embed sustainability principles in each institution's governance frameworks and risk acceptance systems. The policies require banks to include environmental and social, physical, and transition factors in the assessment of risks that they and their clients face, to incorporate these in the determination of risk appetite, lending activities, and credit monitoring. And these policies are expected to affect how banks decide on credit underwriting and pricing of potential high ENS sectors and transactions. These have been issued in 2020, and banks are expected then to implement this in 2023. Let me stop there first, Su-Yen. That's quite a lot, and I guess also to be able to give the rest a chance to share.
Yeah, thank you for the great framing to kick us off. I actually want to shift gears because the Lao environment is, of course, extremely different. So can I bring you in, Anthony, to give us a perspective of what you're seeing from in the Lao environment? Because obviously every market is different, and the dynamic there is certainly not quite what Lynette has described in the Philippines, I imagine.
Thank you very much, Su-Yen, and thanks, Lynette. I think you have set the stage. We are actually quite a polar difference from where Philippines is at the moment, and I think clearly Lynette has shared some parameters and also some regulations around what are some of the expectations. So maybe let me just firstly share some key points about Laos PDR. For those who have not been here, it's clearly a beautiful country. It's landlocked, and we are now using it to the advantage and to make it land-linked, being the first country in ASEAN to have completed our first leg of the bullet train from China that links Vientiane all the way to Botan at the border of China. Now, there are no specific requirements by the central bank on ESG yet, or sustainability or climate change yet, but these are early days and we are starting to see a lot of chatter and interest in this area. But overall, the government has a framework as to these sustainability goals, and I'll just share a couple of it. There is a plan for net zero emission by 2050. There's also a target to reduce greenhouse gases from deforestation to about 30 million tons of carbon dioxide equivalent, and to sell forest carbon credits. There's also a plan to reach 14% of all vehicles throughout the country to use clean energy. And with the recent spike in petrol prices and fuel shortages in the second quarter of this year in Laos, there's now a huge renewed interest into EVs. And in fact, in the month of May, June, many of the brands were actually ran out of stock for EVs. And the government has also now deliberately started purchasing EVs as official government cars. So in some way, we are quite far behind, very nascent, very early days, but in some areas, we kind of leapfrog because maybe there's a lack of baggage, if I could use that word. As some of you may know, Laos is kind of like the battery of Asia, ASEAN. And we have now more than in excess of 200 hydropower dams producing hydropower in lieu of using coal-powered power plants. And for banks like myself, I like to just give an example. So while there is no specific requirements or guidelines to insist that banks or our clients must meet a very specific standard of climate governance or climate control or even ESG, the World Bank has actually started a very interesting fund to support MSMEs in Laos who are now trying to overcome the effects of COVID-19 as we move into the endemic stage. And 5 banks were then selected out of 44 banks that operate in Laos. And the bank that I work with, we are the first bank to have passed all its due diligence and also these ESG safeguards, which includes climate governance as well. Now, this is actually a big motivator because being the first bank to have passed it and passed all the more than 20 vectors of ESG safeguards, we have now received our full approval, and we have received the first tranche of funding for about 3.2 million US to support MSMEs. So it's not a small amount for a country like Laos. With only 7 million population, and the majority of our businesses are micro SMEs, so 99.4% of businesses are micro SMEs. Now, this has a clear implication for banks. So the bank that I work with, clearly we benefited by being able to pass these safeguards. Now, our clients who want to now apply and access this fund must also meet basic requirements of sustainability and ESG, including climate as well. And they will then be able to access these funds at very low rates, almost half of what the market charges. So while there is no specific requirements, but for very, I would say, direct funds that we want to focus on, we already start seeing this kind of requirements. So still very early days for Laos, but I think this is going to be an area that many people will start looking into due to this kind of requirements set by global international organizations like World Bank.
That's great, Anthony. And clearly there's some moves being put in place to really provide incentives. So it's not so much the stick approach, but here's some incentives, because if you're able to access that funding, it's obviously at very preferential rates based on what you're describing. Let's move across to Thailand. And I'm wondering if we could hear from Kun Yongyut, what's happening in Thailand, particularly on efforts from the banking sector and authorities in terms of developing the entire sustainable finance space. Where does the regulator stand, and what's the market situation at the moment?
Good afternoon, everyone, again. So I just bring you back to Thailand, right?
Yes.
So just to start, I just want to discuss on the country level to align with the global commitment on COP26. In November last year, Thailand set the target to reach the carbon neutrality by 2050 and net zero carbon emission on or before 2026. This makes very clear that the climate change will be the top priority agenda to all parties, right? So at the capital market, we have the one report, which is the initiative from the Security and Exchange Commission of Thailand to combine two reporting requirements for the listed company to be one report. But in addition to that, right, the higher level of disclosure on sustainability or ESG aspects of the business is required. And this helps in terms of increasing confidence by all stakeholders. Lastly, I mean, the company now, must disclose the material sustainability topic, such as the sustainability strategy, policy, and the target, the value chain issue, the environment impact, the social engagement, and also the greenhouse gas emission information. The development in terms of capital market. Also, in banking sector, we have the working group on sustainability finance initiative for Thailand. This is a collaboration among 43 government agencies, including regulator and policy maker, bank, investor. And they come up with the joint statement on how to drive sustainability finance and support the sustainability development in Thailand. The logic behind this, just the fact that the financial sector play a very important role in allocating the fund toward the real economy transition toward sustainability. Bank, therefore, would help to promote sustainable business and project through sustainable lending and investing among relevant parties. Also, clear direction with support and incentive scheme from relevant authority would also help in achieving the SDG target and carbon emission reduction target. And also for the capital market, just last year, the SEC issued a new regulation on the sustainable linked bond, so that Thai Union just to be the first one to issue the sustainability linked bond under this new scheme. And they're also working on other sustainable finance framework as well, like those transition bond and other type of financing that will come in the future. So that just to wrap up the overall what's happening in Thailand and also the sustainability and banking sector in Thailand.
Wow, so a lot happening in terms of pulling the multiple players in the ecosystem together. It's regulators, you said, 43 government agencies working together. That's a huge effort. Let's take a view from the regulator side, right? So I'm going to move across to Suraya. I mean, clearly you've heard from the Philippines, Laos, Thailand. Our audience has heard sort of different approaches. But I think the commonality really is around, the regulators taking some action to actually push the green agenda. So it'd be really great to hear what are some of Bank Negara's key initiatives and priorities.
Thank you, Su-Yen. Good afternoon, everyone. Thanks for inviting me. It's a privilege to be part of this panel discussion on climate change and the banking sector, how it will affect the companies. So yes, Su-Yen, the regulators have an important role in developing policies to push the green agenda. So in Bank Negara, green finance presents a paradigm shift for financial institutions, and it requires entity-wide adaptation from business strategy to internal operations and processes, risk management, human capital, as well as in customer relationship. So from a regulator's perspective, we are the enablers that can be put in place to ensure this can be fulfilled by the financial institutions and the wider economy. So Bank Negara Malaysia's primary focus is to promote financial system resilience by ensuring effective climate-related risk management by the financial institutions. We also have the responsibility to foster a conducive market environment for green financing and investment, as well as promote a just and orderly transition. So that's the key points that I would like to mention here. Given this wide-ranging list of focus areas, Bank Negara has initiated a number of initiatives in support of the climate work. So in Bank Negara, alongside the Securities Commission, is the co-chair of the Joint Committee on Climate Change, the JC3 in Malaysia. JC3 is actually a regulated industry collaborative platform formed in 2019 to pursue collaborative actions for building climate resilience within the financial sector. So JC3 has led and supported key climate initiatives in the financial sector in Malaysia. Its scope covers risk management, governance and disclosure, products and innovation, engagement and capacity building, and bridging data gaps. So Bank Negara Malaysia, together with the JC3 members, have developed the Climate Change and Principle-Based Taxonomy guidance document to guide the financial institutions in assessing and categorizing economic activities according to the extent of which the activities meet climate objectives and promote the transition to low carbon and sustainable practices. For information by Negara, we have also issued the Value-Based Intermediation Financing and Investment Impact Assessment Framework, or VBIAF guidance document, to facilitate Islamic FIs in assessing their financing in investment activities, taking into account the ESG risk considerations. In-depth VBIAF sector guides have further been issued in the sectors of palm oil, for example, renewable energy, energy efficiency, oil and gas, manufacturing, as well as construction and infrastructure. We have also issued the climate risk management and scenario analysis exposure draft for consultation. The paper will be finalized soon, and we plan to issue the policy document by this quarter 3 of this year. The paper is intended to ensure FIs strengthen the management of financing risks stemming from the climate change. Earlier this year, Bank Negara Malaysia has also launched the Low Carbon Transition Facility, or called well known as LCTF, a specialized funding for the small and medium enterprises to assist them in their transition towards becoming more sustainable and climate resilient. We are also active in building the capacity both for the industry and within our institution to build adequate expertise to facilitate the transition to a low carbon economy. We are also working to shift our own operations to becoming greener and more sustainable via energy efficiency, energy management, for example, and waste management measures, among others. At the regional front, we are one of the 8 founding members of the ASEAN Taxonomy Board. So as you mentioned earlier, the ATB is the group that developed and maintained the ASEAN Taxonomy. So the version 1 of the ASEAN Taxonomy was issued for target consultation in November last year in conjunction with the COP26. So now we are working on refining the version 1 based on the feedback received, and we are now working on developing the thresholds for the identified focus sectors. Those are the key initiatives of Bank Negara Malaysia. So I pause here and pass back to Suraya.
Certainly sounds like you're very busy. Lots of things going on. And one of the things that strikes me actually is, so there's a lot of action that's being driven by the regulators, which is understandable because once countries have signed up to the COP26 commitments, they have to push it through regulation, right? They have to make sure that it actually filters down to the companies. And of course, the way you do that is via regulation and support, industry support. Several of you talked about providing support for SMEs, for example. What I'm curious about, though, is from all your respective purposes, how ready do you find companies in terms of being able to make some of these shifts and transitions. So maybe I'll start I'll actually go in reverse order. I'm going to start with Suraya from a regulator perspective. What your observation of companies, whether they're small and medium or even the large ones, in terms of navigating the shift? And then we'll go from there to Anthony and Lynette from a banking perspective, financing perspective, and then last we'll hear from Yongyut from a company perspective, right, what you're observing. So Suraya, over to you first.
Thank you, Su-Yen. So based on our observation, we would see that the smaller companies, they are struggling. But the good thing is, in terms of awareness, they have more awareness and they're not more aware on the need to transition to low carbon and more sustainable practices. And the good thing is also their support system. Most of the ministries, for example, even Bank Negara, we are supporting the SMEs to transition. So in this journey, we're not just leaving them alone. And to some extent, what we did was we include them in some of our conversations with the bigger corporates, for example, for them to learn from the bigger corporates. In this journey, I would say, based on our experience, all companies faces lots of challenges, regardless whether you're big or small. But the good thing is the drive to change, because at the end of the day, everyone knows the need to transition, because the evidence of climate change is clear out there. So, yeah.
Well, let's get a view from the Philippines. Now, in the Philippines, do you find that amongst your clients, for example, amongst companies, that is a first of all, widespread awareness, and then acceptance, and then actually action, right? There's sort of three different steps there. Where are companies at? Or do you still have some companies sort of saying, well, maybe not yet, we have other priorities, interest rates are going up, we need to do with cash flow, loads of issues that company could be worried about, right? What are you hearing from companies?
So I think different companies are in different stages of their ESG journey. But clearly it is such a priority right now that it cannot be ignored. And I think the impetus coming from regulators makes it a bit even more pronounced, because the access to credit, the ability to finance projects, and just generally the ability to access capital markets gets impacted.
Yeah.
So the different companies are in different stages, and admittedly the challenges also are around being able to put together a robust framework that is science-based. And then again, you go into the rabbit hole of how do you put together all of the data that you need to be able to come up with a really credible framework that will cut across various business verticals within, for example, a very large conglomerate. So with that, and putting together a framework, being able to partner maybe with a third party who could help in terms of calibrating and measuring emissions, and all the other activities within the firm that impact ESG. Again, and then when you do have the framework in place, you're able to access, labeled bonds, sustainable finance. And then with that, of course, will come the regular audit and assessment of the commitments that you have actually manifested. And of course, all of this costs. It costs a lot of money. So the larger conglomerates may have the wherewithal to pursue it, but certainly middle market companies will be quite challenged. And I think this is where we will need support also from the public sector to be able to bridge that gap.
Yeah, definitely. And I can imagine the situation in Lao PDR is probably even more acute. But what are you hearing from companies in Laos? Let's get you off mute, Anthony.
Yeah.
There you go.
Thanks for the question. So for Lao PDR, maybe I just set the context a bit. Just now I kind of briefly mentioned. So if you think about the entire economy and you look at all the businesses, if we look at SMEs, which include MSMEs, it's 99.8% of the entire business industry. Yeah. And if you look at just pure MSMEs, it constitutes 99.4%. So majority, almost 99% of all SMEs are actually MSMEs.
Yeah.
So awareness, that's the first point. The second point I'd like to share is awareness is relatively low when it comes to climate governance and this whole thing around ESG. But there is a growing interest and there's a lot of activities in the areas of youth and civil society. But there's not so much interest or chatter in the commerce and industry sector. But the commerce and industry sector, like all of us in the corporates, we are the ones who actually need this the most, because we are probably the ones that impact the environment the most and we are probably the culprits, right?
Yeah.
So where all the businesses are kind of at the moment is that with the pandemic and all, there is this whole focus on bread and butter matters. And just talking and listening to a lot of our MSME clients and going around and just talking to people, the mindset at the moment is I need to survive today first before I worry about what's going to happen in 3 years, 5 years, 20 years, or 30 years down the line.
Yeah.
And I spend a lot of my time going down to the ground. I've actually traveled to all 18 provinces in the country. I've been to the most far-flung hinterland, and really to talk to a lot of the small businesses. It's actually very basic things that they're focusing on at the moment, besides trying to survive and trying to overcome all the different issues in the economy. I think it's simple things like, for example, people talk about, oh, you need to have an accounting system. You've got to make sure that, you are registered, you do this and that. But a lot of businesses are struggling to just do basic bookkeeping, for example. The whole idea of, how do I separate personal money from company money, simple things like this.
Yeah.
So what we are trying to do to educate and to really kind of, start right from the very basic is, number one is we are also on a panel of the Ministry of Industry and Commerce. 1 out of 4 banks that provide funding to SMEs in the country. And one of the things that we have now implemented is that everyone who wants this funding from the Ministry of Industry and Commerce must attend training. And this training will then cover some very basic things around, of course, how to manage your business, how to manage your money, but also starting to talk to them about why is it important for you to have an understanding of sustainability, to run a sustainable business. And on our part, we have launched a program called BizGrow, which is basically a mentoring and coaching program. And it's open to not just our clients, but anybody can apply for it. At any one time, we will take in 20 small businesses and we'll mentor the entrepreneurs. And one of the key areas that we are now focusing on is creating this awareness around sustainability. And we are the first and only bank in Laos that actually runs a full paperless bank branch. Everything is purely digital. From the time you take a queue, open an account, withdraw money, you don't touch a single piece of paper. Everything is controlled by an app, by a tablet. We even use facial recognition. So just this thing of, we have done it, we have tried it, and we have seen how it has actually impacted our business are things that we actually share in our mentoring program. We actually give them a tour of our paperless bank branch, and we explain the rationale and the reason why we developed this. Now, the whole idea is, I can't influence 7 million people in Laos, but at least the people that we talk to, the people that we share with, one by one, we can actually try to do that. So I know I'm not speaking, on the entire country, but at least for the sector that we are focusing on, which is mainly the MSMEs, we are one of the most active in this sector. One more point that I like to raise is also this point around, as we train and as we coach, we see some people beginning to understand this concept and they say, yes, I would like to access this funding. I would like to make a change, come and guide and help me. And we said, sure. And but what we also realize is that most of them actually do it just to check the box, just to tick off a box so that I get the funding. And after that, they really don't care. They will probably not have proper safety measures. They will not have factory that has, proper waste management, for example. So I think we need to also think about not just awareness and creating this knowledge base, but how do we encourage businesses to want to do it because in the long term they benefit, rather than they're doing it just for lip service or just to pass a certain test. I think that's a challenge that we need to overcome.
Great point. I mean, it's easy enough to check the boxes, but then do they really, they have a cognitive understanding, or are they actually truly committed to going down this path? Actually, on that point, I'd love to bring Kun Yongyut in. When you look at sort of the regulatory framework, you look at basically all the pressures that are coming onto companies, right? And there's loads of pressures facing companies. Lynette's talked about a few, Anthony's talked about a few, of course, different stage of development. How ready do you find that Thai companies are in terms of the sustainability front, in terms of, just moving down the sustainability journey? What's your observation, Kun Yong? It could be about your company, it could be about other companies as well. It'd be great to get.
Sure. Thank you, Su-Yen. So just to answer this question, I just want you to take you back to maybe 2014, 2016, right? By that time, as you might know, Thailand was hit hardly from US on the TIP report, right? Or human trafficking issue. So we are put at the lowest level at tier T in 2015. And we just was uplift back to tier 2 recently. That one has very big impact to our country, to our industry, and also to the company in Thailand, right? And then another topic specifically to the seafood industry. Thailand was put in yellow card, and the concern on IUU. IUU is stand for illegal, unreported, unregulated fishing, right? So that, with those impact, the government of Thailand, the industry, the company, and the relevant party is required to go through the whole process just to revamp its sustainability practice to align with those developments. So that currently, I would say that, for medium or large company that also exposing to overseas market, they had made a good progress to improve their sustainability activity, right? You can see that we have 13 Thai company listing in DJSI in 2015. Now this number increased to 24 Thai company in DJSI. So that on the medium and large company, right? But for the smaller and the medium-sized company, there's still a lot more work to promote and to encourage them to move in the same direction. That also the reason behind of those joint statements that I mentioned in earlier on the financial sector, that they try to come up, and put the progress on and accelerate the progress of those sustainable and sustainability finance. So that all that happened. I would say that for smaller or medium-sized company, we face the same issue, right? And the good thing happening here is the knowledge sharing, the education section. We can find easily, especially here in Thailand, on this topic, climate change. You can attend the seminar or the class, and even the government organization like those greenhouse gas organization, beside the regulation, beside the setting the policy, right? I see them in every panel for this current seminar, right? So that the greenhouse gas climate change is very, very popular topic, and the medium, smaller size company can learn from all of those events.
Well, the first step is simply exposure, right? So at least you got to start with that, which makes a lot of sense. I want to kind of bring our participants in now. Could I ask our participants to just type in the chat box which industry you're from? Just type into the chat box so we can get a feel for whether you're in banking, you're in agriculture, you're in professional services, academia. Just drop a note into the chat. Where are you coming from? So we'll be able to see your responses as they come through. Can we see from everyone? Just drop a quick note in the chat box. Which industry are you from? Which are you joining us from today? Can you type in the chat box? Okay, I see somebody put into the Q&A banking, other industries. Which other industries are you coming from? Just so we can get a flavor. And you see the chat box at the bottom. Okay, banking. Oh, the chat is disabled. Okay, so thank you for putting into the Q&A. Education, banking, HR, education, banking and transportation, plantation, legal, banking, investment management. So we have quite a few in the financial services sector, but also a lot who are not. So hospitality, real estate, consulting, property, education, consulting, real estate. Okay, so quite a broad group of participants that we have here, because of course, it really also varies the kind of industry that you're in and the impact that you know, when you look at some of these regulations. If you're in, for example, I think I saw somebody here in plantations. Well, the way you think about sustainability is going to look quite different than if you're in HR recruitment, for example, right? So thank you for sharing. That's really, really helpful. And I apologize, the chat box I think has been disabled, so you can just type it into Q&A and that works perfectly fine. So, you know, when you think about where we are today, and maybe getting, now that we have a bit of a view of the different kinds of industries that people are in, again, real estate also, right? A lot of heavy industry there, which might be quite impacted. One of the things that would be quite keen to hear about is, you know, how these, you know, what are banks doing, the corporates and financial institutions, and are doing in terms of accelerating these commitments. And I want to sort of turn to Lynette here to talk about what you see as important to accelerate these commitments. I guess particularly from the segments of the market that are facing either outsized challenges, or perhaps we've talked a lot about SMEs in the case of Lao, the micro SMEs, right? What can be done to help them? And from an institutional perspective, I'm sure each of you are doing some really interesting things. So it'd be great for people to learn from you.
So yes, if I could respond to that, Su-Yen, I think one of the most important initiatives, I think, that we've undertaken as a bank is to make sure that transition for our clients is just. We have a transition acceleration team that actually helps and provides clients in carbon intensive sectors with a deep expertise to help them accelerate their low carbon transition and provide them tools to measure the progress. The difficulty, I think, for most of us in developing countries really is how to balance. I mean, there are so many concerns at the moment. We're challenged by inflation, how to continue to grow and develop. We're opening up our economies post-pandemic. But we also need to be mindful that there is this priority around sustainability and ESG that also has to be balanced. So it's in a way like threading a needle. From the bank, what we try to do is really make sure that we don't shut the tap for our clients, but we as well provide them with the tools to help them to transition. We try to assist them in putting together their frameworks and make sure that there are still ways to access capital, to access funding, to be able to transition away from the, I guess, carbon intensive businesses. So we really try to do our part, but admittedly, it's not an easy, process.
No, I mean, it's clearly complex, and it sounds like that means that the role that the financial institution needs to play actually is quite a bit more intensive, right? Because I mean, it's obviously in your interest to help your clients come up that curve, but it also means that you have to do a lot more to support them. I'm going to throw the next question across to Anthony. And this is a question from one of our attendees here, who's saying that for a company who is just starting to worry about how sustainability is going to change their business and how their funding channels will be affected, what is the one thing they should start looking at or rather focus on? Are banks going to start imposing requirements on their clients or even withhold access to borrowings? You gave some really interesting examples about Lao in terms of the incentive side, but what about the withholding of access side? And I'm, inviting you to address this question because I think you probably have a lot of companies who are just starting to worry about this, right? Over to you.
So, I think we are taking a very practical approach to this. While we clearly want to achieve a lot and we want to you know, I won't say impose, but at least try to encourage, educate, and to help. But I think we are taking a very practical and a very pragmatic approach to this. I don't think you know, the economy or the country can change overnight, and it will take some time. And I think the approach we have been taking is really along the lines of if you are a first mover, if you take the initiative and you start doing something, you might get a bit of a carrot.
Mm-hmm.
So if we were to switch off the tap, I think that's really taking a stick approach as to, you know, you suddenly don't have access to capital, you don't have access to funding. And I think that is not the way that we are approaching it. So what we want to do is we want to at least, you know, it's still very early days, still very nascent in Laos. And clearly what we want is to create awareness, create that incentive for people to say, hey, this is actually not a bad thing, because by going with these, you know, very basic requirements, I get cheaper fund. I get, you know, some training, I get some guidance, I get some coaching, I get some access to a network that maybe enables me to grow better in future, more sustainably and also more responsibly. But clearly, majority of the businesses are not there yet. Majority of the businesses, as I've mentioned earlier, it's really about bread and butter. If I can't survive 2022, forget about reaching 2050, net zero, net emission, and all this kind of stuff, because I won't be around.
Right.
And
that's right.
And clearly, we got to go with this pragmatic approach. And I think as a bank, we want to be able to, you know, keep our pulse on the business and understand what it's really pressing for them. So the approach we have taken is really around people who, or businesses who want to at least, you know, kind of take the first mover advantage, or at least try to adapt and to improve. We give them that access to reasonably priced funding, which is actually at very, very low rates of at least 50% lower than the market. But for all the other businesses who, you know, still can't meet those kind of requirements, it's not like we shut the door to them. They still have access to the normal SME funding or corporate loan funding, or even any other payment instruments that they want. And we still, you know, have to treat them with respect and, you know, play our role as a bank in the larger society. So I think for now there is no real compulsion for people to, you know, have to make that switch. And clearly, I don't think in Laos there's even this worry that if I don't meet these requirements, I won't have access to funding. I think it's just generally businesses are worried about, do I get access to funding? Doesn't matter what kind of rates, what kind of, you know, ESG requirements there is. I mean, coming out from the pandemic, everybody wants to really just thrive and survive. And I think the other interesting fact about Laos as well, if you look at my virtual backdrop, this is somewhere in Luang Prabang, a very beautiful province north of Laos, and it's a UNESCO heritage city and province. Much of the country is actually like this, and tourism plays a very large part of the economy, besides you know, infrastructure and mining and those kind of things. But tourism is actually very big, and now with you know, the economy opening back up, the country opening back up, everybody is trying to get into this. And really, you know, if this sector continues to rebound and grow, naturally people will be very concerned about sustainability, because the whole tourism in Laos is about ecotourism. You don't have anyone coming here for medical tourism or shopping tourism, those kind of things. It's really about ecotourism. So I think, you know, on one hand, there's not enough awareness and all, but on the other hand, I think naturally people will be excited about preserving the climate, preserving the environment, making sure that, you know, we still maintain this natural green forestation, agriculture is sustained. You know, these kind of things I think will hopefully help to counter the effects of the other side of industrialization.
Right. Thank you for sharing that perspective. And it's certainly, having been to Luang Prabang, I can appreciate that. Yes, from a tourist perspective, you're really looking for the natural beauty, and that is the value proposition. I heard you make a point really around the importance of providing carrots rather than sticks, again, in the Lao context. I'm curious to hear from you, Suraya. So from a regulator, when you sit in the regulator seat, right? And again, not commenting on Laos specifically, but perhaps in the Malaysian context, carrot versus stick, right? Which, I mean, it's always a balance, right? But from a regulator perspective, where do you fall on this spectrum in terms of companies that are sort of a little bit slower to adopt, move up the curve?
Thank you, Su-Yen. So our approach is really, we're trying to balance both. To some extent, we're trying to give the necessary incentives for the banks to provide the necessary assistance to the businesses, for example. And at the same time, we are also using the stick to make sure the necessary actions are taken by the banks. But at the moment, and even when we first started all this, we try our best not to make it mandatory, because we know of the challenges, especially when we started this during the pandemic. So we know the challenges not just the businesses are went through, as well as the FIs as well, the banks as well. So because of that, what we did was we have more conversations with the banks. During our annual conversations, we make sure they are aware of the need to transition and of the need to support the businesses to transition. Mm-hmm. So by knowing the responsibility, then definitely they can assist the businesses to transition. Allow me to just pick up one of the questions that posted in the chat, because it's quite linked to what I plan to mention here. With regard to the box ticking exercise and what is Bank Negara doing in order to minimize to some extent greenwashing risk. So we take greenwashing as something very serious, and as we have conversations with the banks to encourage them to support the businesses to transition, we also mention the potential risks of greenwashing. Again, on this, we're aware of the challenges that businesses are going through. Hence, we require the financial institutions to support. But what we have make it clear to them is that it's very important for them to do annual review, for example, continuous engagement with the clients to make sure there are some sort of transition, or even they have achieved what they have planned to do at the beginning. So that's how we're looking at things right now. Definitely, we are looking at opportunities to give more incentives, but we have to make sure we take the steps one by one and make sure we take the careful, we're taking the careful and pragmatic approach. Yeah, I pause here and pass back to you, Suraya.
Thank you. So I think I'm hearing it's a bit of a balance. You're trying to be pragmatic. You don't really want to kill off the companies. That's not in anybody's interest. You want to sort of help them get through it, but at the same time, make sure that there are programs in place, support in place, so that they have a bit of a support infrastructure. Now, somebody else here asked a very interesting question, which is the very first question in our Q&A box. And I'd love to get your perspectives on this. And maybe I'll start now with Kun Yongyut and then move across to the rest of the group, which is, how will sustainability impact employment trends in the banking sector now and in the future? So I think maybe I'll start with from the company perspective and then move to the banks. So Kun Yongyut, how do you see sustainability impacting employment, let's say from corporate perspective first?
Yeah, so on this question, I try to look at the corporate perspective and cover those topics that already mentioned by Anthony, Suraya, or Lynette, right? So we believe that the bank or investor or regulator will move more and more towards sustainable finance, or at least, if not, right, to have the due diligence on sustainability at the borrower, right? Even it's the tick box, but the impact is quite huge. It means that it will have the impact whether the bank will finance you or not, right? So that's the first point. The second point, they also have the aim to have the increasing percentage of sustainability, sustainable finance in their portfolio, and reduce the lending portfolio to those brown industry or no sustainability company. So this another impact whether which industry you are doing and what the trend of those sustainable finance or the aim to have the portfolio of this sustainable finance at the investor or the lender side, right? So that need to be aware on this one and check on your industry, right? And next one is, you also heard that some measure will be on voluntary basis, but for believe me, at one point it could be very soon this will be mandatory, so that we cannot avoid to do all of those things. especially on the sustainability thing, right? So that is mean if you don't do any sustainable anything on sustainability, the accessing to the funding will be limited, and that will cause the cost of financing. You hear from Lynette clearly, right? The bank, the central bank in Philippines is looking on this topic as well, right? And considering the trend and the coming challenges, I think there is no choice at the corporate side to bring this topic as the backbone and as the strategic competitive advantage. At early stage that Thai Union implement this one, if you look at the return for sustainable investment, it's not very good, or the customer still not paying for our effort, right? But those improving competitive advantage, or how we can differentiate ourselves from our competitor, right? Or the good accessibility to the larger liquidity pool will provide directly and indirectly benefit to the company in the future. Right. So that my point that want to give to the other corporate as well.
So I guess given that, what does it mean for jobs, right, and employment, specifically in the banking sector? And it'd be really interesting to hear, both from Anthony and from Lynette, and maybe from Suraya as well. How do you see this changing employment in the banking sector, including, jobs? How does this affect jobs? Lynette, want to give it a go?
Sure. I guess the first thing is, apart from it being driven by our regulators, right? For example, one of the circulars that was issued was that the embracing ESG and making sure it's embedded in strategy, that it starts with the most senior people in the bank. So the board will have to embrace it and understand it, embed it in policies. And then, of course, there's a senior management team who will also need to perfectly understand how to manage risks, E&S risks, and how that in turn cascades to credit appetite, risk appetite. So I'd like to divide it by maybe first explaining that we will need experts and specialists within the bank, within the institution. We have a chief sustainability officer. There are teams that are farmed out regionally. We have industry experts for various verticals, oil and gas, metals and mining, power and utility. So all of these experts are resources made available to everyone. So that in a way shifts where you really have a large and expanded team that should be able to speak with expertise and specialization around the various industries and of course the E&S policies around it. But apart from that, I think as bankers, we are also required to have at least base knowledge around sustainability, and we are all required to take what we call it a sustainability blue belt e-learning process where it's part of our goals, it's part of our objectives. We go through e-learning on a regular basis just to make sure that we understand the issues at hand and that we're able to at least bring content and ideas to our clients.
So clearly you're seeing probably, it sounds like an increase or at least a shift in certain kinds of expertise or roles needed within the bank in order to be able to enable the kind of support that's required for different companies. What about you, Anthony? How are you seeing sustainability impact employment in the banking sector? How does this affect jobs?
Yeah, I think it's a really good question. I think just now Lynette has covered some of it. To me, new roles are and will be created for sure. Years ago, you never heard of roles like Chief Sustainability Officer.
Yeah.
And it's a CXO role. It's not like a head of unit or a manager, right? You're talking about a C-suite that reports into CEO. So that's a very senior role. Now, I think besides just creating roles, what will also affect employment trends and employability is that employers will also start looking at employees with these kind of experiences. And besides the experience, it's also those who's got innate skills. Because, for example, if you talk about someone who can evaluate and look at carbon footprint, it's not someone, it's not anyone who can just do the calculation, right? I mean, of course, you can go online and there's a very simple methodology how you can compute your carbon footprint, but you need to have skills for this. So clearly, there will be, when you look at employment, it's not just the roles, but even to get into the roles, you need to have some experiences and you need to have skills on the other side. And I think what will be also interesting is employers will start looking for those who've got the right track record. So it's not you come to an interview or you come and speak well about, oh, I've got knowledge, and you probably read it in a book or went for an online course, but you need to be able to prove that you have done something, right? Or you have to disprove that you didn't do something, because maybe in the last 3 years you've funded some very controversial projects, and that might weigh on your employment ability for a new role or for a CXO role or for a CEO role. So I think it's not just the plus side. I think there will also be minuses if you misbehave or you have done things which are not aligned to these sustainability goals or climate change goals, climate governance goals. The other area that I'm also seeing a big opportunity is also around the area of for people to have new skills, new knowledge. That means universities got to have new courses. You need to have new programs, new degrees, maybe masters in something. And training, learning and development, I think these are all the fields that will start growing in this space. And clearly, in addition to this, I already start seeing consultants popping up, offering this kind of consulting services. More recently, I was just talking to some, heads of international organizations in Laos, and we are just sharing notes around climate governance, and and I like doing these kind of things, just sharing notes and just one by one having chats with people of interest. And I start seeing that in months, maybe 6 months ago, 1 year ago, you hardly can find someone who can look at things like carbon footprint or even look at waste. But today you actually have many names that are popping up to say, hey, I've done this, I can do this, I can compute this for you, I can come and advise you on how to do your sustainable waste management or electricity, or we can review your building requirements and your travel plans. And so I think that opens up another industry as well. So it's not just purely banking, but I think everything will change. The entire ecosystem will start changing when there is a demand for it, and when there's supply for it, I think everything will change. So this my my thoughts on employment and employability.
Well, that's really great insight. And we actually had quite a number of people here who earlier indicated that they are from the education sector or consulting and advocacy. So lots of space there in terms of thinking about opportunities. Because my guess is when you're thinking about it, I mean, Lynette and Anthony, both of you are CEOs of your respective organizations. When you're trying to bring people in with these kind of skill sets, I'm guessing it's really hard to find enough people with these backgrounds, right? I mean, they're not just like running around.
Right. Yeah, you're right, Su-Yen. In fact, I think, in the bank, we're really expanding the teams, especially in the transition acceleration team. And certainly it's not easy to find people with expertise. And to Anthony's point, and even for companies, we do lean on consulting firms to also help develop this top-down sustainability approach. So for our clients, we need to review their E&S policies, and you need to do a gap analysis. You need to do a roadmap development. So not all the expertise will reside in the bank. So you do need to have partners as well, and engage perhaps consultants in the process.
Yeah, so it actually in some ways opens up a brand new space. If you think about how I just used another analogy, 10 years ago, nobody was talking about app developers. right? So it was a kind of a nascent skill, and people were sort of saying, oh, you know, those app developers and, you know, IO, IX user interface, whatever. Now every organization has, you know, people who are big data architects, for example, but back in, you know, 10, 15 years ago, you couldn't find any big data architects. So maybe 10 to 15 years from now, we'll be saying the same thing about people who have the skills in the sustainability space. But right now, it's probably still at the very much developmental stage.
So, Su-Yen, can I just add on one point to what you just mentioned? It's actually very interesting. Recently, I was approached by an app, not an app developer, actually someone who runs, who wants to kind of in fintech.
Mm-hmm.
And we just had a chat, and he says, "Oh, Anthony, I hear you're doing some work around this space." And this person is actually interested in combining fintech and sustainability to create a new app. And when I heard the idea behind it, and I thought, wow, this is so refreshing. It's like, you know, bringing this whole entire thing together. Everything that you just said around, you know, technology and app development and sustainability and how it affects climate. And there was actually a model that actually makes this commercially viable. And when I heard the early thoughts about it, I was actually so excited.
Wow, actually, well, and so I think, you know, the point is that there'll be lots of opportunities that also come from this. We have a few more minutes left, and I just wanted to make sure that everyone has a few minutes to give everyone a few parting thoughts. And I'd like to suggest that we make these parting thoughts around, you know, we have a broad range of people who are here on the call today, different industries, we all saw that. But in terms of moving, you know, taking the first step forward, it's always the hardest, right? The first step forward. What advice would you like to share to participants who are here on the webinar in terms of what they can do? Because it can be very daunting. You look at this and this, oh my goodness, there's so much to do. Where do we even start? So let me start with Suraya, perhaps from a regulator perspective. What would you advise people to do in terms of just, you know, getting going on this journey? Any advice? Top 2 or 3 tips.
Thank you, Su-Yen. My advice is to start small and start now. You don't have to wait until this situation is perfect for you to start. You will learn along the way, and along the way, you'll make the best of it, and hopefully you will progress. So again, my advice is to start small and start now.
So just pick something, right? Just pick something and learn as you go. Kun Yongyut, how about you?
I think we already heard that financing or funding will be the lever, right, to accelerate those development of the sustainability. So that we should use this lever to discuss among our, you know, within the company. And the most important, I think the tone from the top is very important to progress the sustainability at the corporate, right? So that as the finance leader or as the trend of the market, right, we need to voice out and push for the change, right? We are the one that responsible for the financing to the business, right? We also are the one that, you know, allocate the funding or the money that we have to help build the future of the company, so that we can help them in sustainable way to put those money into the project, right? So we need to be the key driver and work along with other leaders to set up this sustainability goal and action plan. Yeah.
So what I'm hearing you say is that it's actually really critical for, well, first of all, I heard you say tone from the top. And so tone from the top could be starting from the boardroom all the way down, boardroom CEO, making sure that if somebody is in a board role or C-suite level, they really get the issues, they understand how critical this is. But then I also heard you say that actually the finance function plays a really important role because the leverage is really in terms of financing. So you can actually bring the organization along by really understanding how you connect that lever to the business and helping people understand what needs to happen.
Yeah,
makes a lot of sense. Thank you. Let me then move across to Lynette next. Words of wisdom.
Thank you, Su-Yen. Yes, just a few, I guess, a few words from my end is really, I think, the urgency and importance of promoting sustainability and committing to sustainability is I guess, really top of mind and should be top of mind for many. Realizing, of course, that the balance won't be easy, but I think what I would encourage everybody is to really be part of that conversation and to work, collaborate with, I guess, your government, your regulators, development associations, industry associations, to really be able to, I guess, pull various sectors within the economy to not only understand, but to make every effort to commit to sustainability.
I really like what you're saying about how it's actually, it requires multi-stakeholders, right? To actually bring everybody together. And it's really about sort of everyone taking their own step forward. You can't wait for somebody else to sort of say, okay, you go do that, right? Everybody has to sort of take the initiative to move forward. Anthony, over to you.
I'm mindful that, you know, we've got we now have about 80 participants on this webinar, and
yes,
and I think, you know, everybody has a differing role, different levels in the organization. Different businesses may not be banks or
yes,
even financial services.
Yep.
So I'll just like to share some pointers that I think will be quite general to everyone.
Mm-hmm.
I think the first point for me is, this is something that I personally believe in, is before we have the right to do business, we have to do good for three things. We have to do good for the community, do good for society, and do good for the environment. If we can do this, then I think we have the right to do business, because we make money, or we hope to make money out of this environment, right? Out of this society, out of this community. So I think that's the first point that we have to think about. The second point is be pragmatic and be practical about it. Do what is appropriate within what we can control, our sphere of influence. And I think influence is the other point, right? Because some may look at us and they say, oh, you are the CEO, you can influence a lot, you play a very big role. But to me, I think every one of us influence something. Even if I'm a tea lady, I influence something as well in the organization. If I throw paper all over the place, I contribute to pollution, I contribute to a lot of things, right? And I think do what is within our own circle of influence. Don't worry what role we play. Sustainability, climate change, I think all of us have a responsibility for it, and we all have a role to play. And one thing which I like to suggest, I know it's not always easy, but I try to do it even within my own organization, because I myself trying to influence and encourage my team members to be interested, because most of the time they said, oh, we've got no time for this. We've got to worry about our P&L. We've got to get our numbers up. Oh, we are just coming out from the, into endemic stage, and you are really worrying about this. No, let's do this next year. Let's do this in 2 years' time. Take it out from our objective. Take it out from our KPIs. And what I try to do is with some of my team members is, how do we tie it in with some commercial objective? Because if we can tie it in with some commercial objective, it will then drive our motivation very differently. And one example we were just doing recently was around women in banking, and we could look at how this sustainable objective actually tied in very well with commercial values. And actually we could show and we can prove that we can actually make money with this kind of sustainability agenda. Last but not least, I'll steal a word from Suraya. I think the key word is start. Doesn't matter whether we start small, start now, start tomorrow. I think the word is start. If we don't, then it will never happen. So starts with us. Thank you.
Wonderful wrap up from everyone. I mean, such great food for thought, right? And I think one of the takeaways for me today is hopefully everybody has been able to get a broad perspective across the region. Clearly, Philippines, Thailand, Malaysia, Laos are very different economies, very different structures, different levels of economic development, different. Anthony, your statistics, 99.44% micro SMEs, right? So the context is going to be different. There is no real one size fits all approach that's going to work in every single context. However, a few principles do seem to hold true, which is, I heard some common patterns around the regulators needing to actually translate the national commitments down into regulation that then translates into a balance between carrot and stick. So how do you get that right balance? From the financing institutions perspective, It's going the next step to bring your clients, bring your customers along this journey, being very pragmatic in the process. I mean, if somebody needs a Volkswagen, you don't really want to sell them the gold-plated Rolls-Royce. They're just not ready for that. So you need to help them step through that process. I also then finally heard something around a lot of inspiration around the possible opportunities that actually arise from this. And those opportunities could be around a company that has perhaps taken a first mover approach, which actually puts them in a more favorable position, which actually could be an incentive for them to take action, but also opportunities in terms of jobs and careers, and how that space may open up in the future, including this Do Everything app that Anthony, you were sharing with us, which we could see on the market at some point. And then last but not least, in terms of a journey, personally, I think that in all kinds of change efforts, it's one thing to have a cognitive view around, will we know what needs to happen? It's quite another when we can make it personal to ourselves. And one of the things that I like to sort of remind myself about, if you say, well, between, career, family, health, for example, everybody would say, well, yeah, career is important, but would you trade off career for family? Most people would say, actually, family is more important. You say, would you trade off family against health? You'd say health is actually the most important. So let's get our priorities right. And I think this links into the point that Anthony made, which is doing good for community, society, environment. None of us want to live in an environment that is inhabitable or inhospitable. So in order to do that, we actually need to make sure that we have that priority right. And it's not just about economic growth, whether it's a company or a country. Yes, of course, that's important. But we can't have economic growth at the expense of having, clean water and air, right, to survive in. And on that note, thank you so much to our panelists for such great food for thought today. I learned a lot, as I always do. Thank you, Suraya. Thank you, Yongyut. Thank you, Lynette. Thank you, Anthony. It's been a real pleasure. Thank you for joining us, and thank you for sharing your wonderful insights. And to all participants, thank you for being part of the conversation and for sharing your questions as well. Have a good rest of the day.